Hey, G-Money Junkies, it's February 24th, 2021, and GameStop stock rises from the dead as the Wallstreetbets crowd piles back in. Meanwhile, Reddit.com goes down and super investor Charlie Munger hosts a Q&A and says that Robinhood is a dirty way to make money. You won't want to miss this, coming right up. Today, I had just gotten back from the taco shop down the street where I was happily eating my fish tacos with orange sauce when CNBC reports a massive spike in GME in the last 30 minutes of trading. And in fact, it climbed from 45 to 92 today with a 104% gain on the day, with most of that coming after 3:30 p.m. Eastern. Now, as I speak, in the after hours trading, it is actually up another 50% to $142 a share. And if you look over here, AMC is up 18%. So what would any good investor do in a scenario like this? You go straight to the Wallstreetbets subreddit. At the top of the list was this topic: 1.4 million more GME shares have been borrowed today so far, and hedge funds are flooding the market with shorts, posted around 3 p.m. Eastern. So again, eagle-eyed Wall Street bettors are paying attention to the short interest. Typically, a stock with a short interest of over 30% is in danger of having a short squeeze. So last I checked, the last reported short interest from mid-February was around 40%. This post shows that the short interest must significantly be higher than 40% in the last week and a half. And you know what? The Wall Street bettors noticed. So here's the data that they looked at the site, iborrowdesk.com. And you can see that they were paying attention to these figures right here. All right, so looking through these posts, it looks like these guys again caused another short squeeze. And take a look here. So we buy more. This is the way. 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 Okay, well, I'm not going to continue this thread because I think this is the way. Now look at this. If it closes above 55, I'll get GME tatted on my arm. Manny Stizu, I think we're going to hold you to that because we are now at 150. Noted. Noted plus 1, noted plus 2, noted plus 5, noted plus 69. Noted plus 69, 420. Oh gosh, you gotta love these guys. You sweating already? Well, they're not sweating anymore. They're enjoying this. You know who's sweating? The people who shorted 1 million shares at $50 a share. That's who's sweating. Now, I am not sure what has happened to Reddit since then, but the mass hysteria over GME has caused the entire site to return 503. You know, let me try refreshing this, see what happens. Not happening. And if you're wondering, this was cached from before Reddit went down. Here we go. Our CDN was unable to reach our servers. Well, what's going to happen tomorrow? Well, of course, now I expect people to say to hold, have diamond hands, and continue buying. Don't have paper hands. Look, I'm not a registered investment advisor, and I don't make recommendations, but I always say caveat emptor or buyer beware, because what starts off as a common cause will end up with people looking to their own interests and selling to lock in their profits, causing the stock to drop. So be careful, and if people on the forum are saying buy this is a good buy 300, tread lightly. Meanwhile, Daily Journal Corporation CEO, the sidekick of Warren Buffett at Berkshire Hathaway, his name is Charlie Munger, held his annual Q&A, and he is 97 years old. And I'll tell you what, his mind is still as sharp as a tack. And he's seen many booms, many busts, including the Nifty 50 and the subsequent crash, the 1987 bust, the dot-com bubble and the 2000 crash, and the housing bubble and the 2008 economic crash. And today he was asked about GameStop and Robinhood, and now this was pretty much expected. So the headline from this is Charlie Munger on Robinhood and the GameStop frenzy. It's a dirty way to make money. And what I will do is I will just play the video clip so you can watch and see this. All right, so what we're going to do is actually watch the question and his answer. And keep in mind, this is actually the second question of the Q&A.
Thanks, Charlie. Our second question, we have a couple of shareholders who are asking about this latest retail frenzy. So we have Gavin Smith who asks, what are Mr. Munger's thoughts on the recent GameStop short squeeze by social media and the resulting implications on short selling in the future? And another shareholder named Lee asked, Dear Mr. Munger, please share your thoughts on the recent Wallstreetbets GameStop short squeeze. It seems to involve a lot of your standard causes of human misjudgment.
Yep, frenzies.
Well, it certainly does, and that's the kind of thing that can happen when you get a whole lot of people who are using liquid stock markets to gamble the way they would in betting on racehorses, and that's what we have going in
Bets.
In the stock market, and the frenzy is fed by people who are getting commissions and other revenues out of this new bunch of gamblers.
Robinhood, Citadel.
When things get extreme, you have things like that short squeeze. It's not generally noticed by the public, but clearinghouses clear all these trades. And when things get as crazy as they were in the event you're talking about, there are threats of clearinghouse failure. So it gets very dangerous. And it's really stupid to have a culture which encourages as much gambling in stocks by people who have the mindset of racetrack bettors. And of
Doesn't
course,
miss
it's going to
words.
create trouble, as it did. And I have a very simple idea on this subject. I think you should try and make your money in this world by selling other people things that are good for them. And if you're selling them gambling services where you rake profits off the top, like many of these new brokers who specialize in luring the gamblers in, I think it's a dirty way to make money, and I think that we're crazy to allow it.
So there's his answer. It's a dirty way to make money, and he might be referencing hedge funds. He might be referencing Robinhood. He might be referencing people on the Wallstreetbets forum who push the stock at to unreasonable heights and are encouraging people to continue to buy. So over the next day, we're going to go ahead and continue watching this and see what happens tomorrow, because GameStop, well, it can go to the moon. So until the next episode, stay frosty and invest well.